Property or real estate investment is becoming increasingly popular here in the UK and all over the world, in fact. And because of that, it attracts a very wide range of people with different levels of expertise. So consequently, that means that technical expressions like the word yield, which are crucial to property, are often misunderstood and misused. So the purpose of this video is to briefly explain two of the most common and valuable uses of the word yield, how they come into existence, and exactly how you can use them to make sure that your property investment journey is more profitable and enjoyable. Hi, my name's Edward. I'm a chartered surveyor. I currently work full-time as Head of Investment Finance for a property division of a FTSE 100 listed company in the city. Until recently, I was an associate lecturer at a university here in the UK, teaching property investment finance and property valuation. So hopefully I've got a really good combination of practical and theoretical knowledge that I can share with you. The whole purpose of this video and subsequent videos that I'm aiming to produce is to address a common refrain that I hear from people that want to invest in property. They've probably got the money to invest in property, but they just don't want to learn it. They just want to get on and do it. And so the whole idea here is to produce a series of very short, less than 10-minute videos, giving away for free crucial bits of information about the property or real estate sector to help everyone that wants to invest in property just make sure they've got the basics covered. Right at the introduction of this video, I said that because there were so many people getting involved with property investment, particularly here in the UK, key terms and technical language like the word yield tend to be misused and misunderstood. So before we go into the details of this video and look at the two particular types of yield that I want to cover off, I just want to explain, not define, but explain exactly what yield is. Yield in a property context is primarily linked to the rental income that a property generates. I'm going to say that again. Yield in a property context, particularly here in the UK, is a word that is linked to rental income that a property generates. So if we take that just a little bit further, yield is something that we use to reflect an expectation of rental growth or rental decline in a property. And again, forgive me, but I'm going to repeat that as well. Yield is something that we use to reflect an expectation of rental growth or rental decline in a property. So let's move on. We're going to look at two different types of yield. The first one is initial yield and the second one is all risks yield. Okay, firstly then, let's look at initial yield. This is incredibly straightforward and I've already done a more detailed video on initial yield, breaking it out a little bit and showing how an expanded version of the initial yield calculation can be used for a slightly more detailed analysis of a property investment opportunity. But for today's video, we're not going to go in depth. We're simply going to look at the calculation. So to do that, I'm going to draw this out for you by way of an example. Let's say we are being asked to pay £1 million for a property investment opportunity. We know that that property has a rent being paid on it per annum of £60,000. So with this information, we can calculate the initial yield. We divide the annual rent, which is £60,000, by the price we're being asked to pay for the property, which is £1 million. And we multiply this figure by 100. This gives us our initial yield, which we express as a percentage. So there we are, that's it. It's a really straightforward calculation, but what it allows us to do is understand a particular property investment opportunity at a very quick and very high level with regard to the types of rental return it's likely to give us. That then means that as an investor, we can compare that very quickly at a glance with other investment opportunities. So that is initial yield. Let's move on now. We're going to look at the second element I wanted to discuss and explain to you, and this is equally important. This is all risks yield. All risk yield is not necessarily calculated in the same way that initial yield is. It's derived from gaining lots of information. I'm going to walk you through that now by way of a very badly drawn picture. You can tell I never ever got my GCSE art. Okay, so this building here is an investment opportunity. We really like the look of it. We've completely fallen in love with it. So the first part of the all risk yield process is that we gather as much information on this property as we can. So we'll gather the rent, the condition of the property, the quality of the tenant, and perhaps even its environmental performance. There'll be lots of other information. That is not an exhaustive list that I've just written out there. But what we try and do is establish as much information as we can about the particular property that we're going to invest in. Okay, so next, what we do is we now gather information about the surrounding market. We want to know if this market is active or very sleepy and dormant. Next, what we do is we look for buildings that are similar to the one we want to invest in. We call these buildings comparables, or comps for short. With each of our comps, we gather as much information as we possibly can. So, for example, this one here, it might have just had a rent review, and we can speak to the surveyor who did that rent review and find out what the rent was set at. Is that rent higher or lower than the rent on our property? This one here may have just sold, and if we're lucky, we might be able to find out the price that it sold for. This one here is slightly bigger than our property, but it's brand new. So again, we can gather information about how attractive it was to the market, given that it is bigger than ours and that it's brand new. Does that make it more desirable? Have we got the wrong size property here? Should we be aiming for something bigger? Finally, this comparable here is in terrible condition, and so we can look at the rent on this property, which is in worse condition to ours, and we can establish whether the rent on our subject property is set correctly. As you can tell, the information that we need to gather on the surrounding market is quite extensive. The more information you can get on comparable properties, the better. What we then do is we combine these two groups of information. First of all, the information we've got on our subject property, and we combine that with the group of information that we have on the comparable properties in the surrounding market. Once we've combined the information that we've gathered on our own subject property, the target property that we want to invest in, and all of the information from the surrounding market, we can understand what risks are evident in investing in that particular subject property, because we know which properties are better and worse than ours in the surrounding market. And so that's why it's called the all risks yield. It's a marker of anticipated rental performance, taking into account all of the risks associated with investing in that particular property. All right, so that was a bit of a sprint through initial yield and all risk yield. Very, very commonly, you will hear the word yield on its own. So it's quite acceptable and quite reasonable for you to say, are you talking about the initial yield? Are you talking about the all risk yield? Ask the person who's using the word yield to explain exactly what type of yield they're referring to, because you can see that just with those two examples alone that I've just covered, the meaning is very different, and the way that the individual yield figure is arrived at is also very different indeed. I hope that's been helpful. It's a bit of a challenging topic to try and condense into less than 10 minutes. If you have any questions, please email me. My website address is available at the end of this video. You can contact me through the website. And of course, if you get in touch, if you've got any questions, I'd be delighted to hear them, and potentially I can make a video about them in the future. So drop me a line, get in touch. In the meantime, thank you very much for watching and have an amazing day.